With oil back above $60, natural gas rebounding nicely over the past week, be it off low levels. How should we approach the pipeline companies that are still well off their highs? Consider Spectra Energy, SE, for you home gamers. It's one of the largest pipeline players out there. Gigantic network of pipelines for gathering, transporting oil, especially natural gas and natural gas liquids, all across the U.S. and Canada. Now, I've been a big fan of pipeline companies like Spectra because they're basically utilities. I like to think of them as toll road operators with relatively low exposure to commodity prices, consistently high dividends, like Spectra's bountiful 4% yield. Hey, something the company augmented today with a penny and a quarter distribution. Now, that's the 30th consecutively quarter increase. That's a pretty good record. As the price of energy collapsed in 2014, Spectra's stock fell nearly 25% from its peak last July, down to its trough this January when oil finally bottomed. Since then, the stock's rebounded, but at $36 and change, it's still only about $4 above its 52-week low. Spectra reported this morning its results were generally in line. They do need some parsing. Let's take a closer look with Greg Ebel. He's the chairman and CEO of Spectra Energy. Find out more about the quarter and where the company is headed. Greg, welcome back to Mad Money.
Jim, great to be with you. It's been a while.
Yeah, been too long, especially because I like that 4% yield. I love that 30 consecutive quarters of raising the dividend. No problem with that distribution, even though boosting distribution, even though oil and gas went down in price, right?
Yeah, absolutely. In fact, I think since I saw you, say, 20 months ago, the distribution's up 20% at SEP. The dividends are up 20% at SE, and we've committed to raise SE's dividend by 14 cents a year, call it 8-10%, right through 2017, because pipelines are needed regardless of the price of oil or gas. They've got to get to demand markets, and they've got to get from supply areas, and that's what we're doing. Well,
let's talk about that, because you've got two very interesting things happening at your company that are really kind of indicative of the whole country. First, we're finally going to get cheap natural gas to the Northeast and New England. That is yours. Second, we're going to be able to get all that natural gas that used to go up from the south down to the South Marcellus and Utica. You're key in both those, aren't you?
Absolutely. So in the Northeast, we started with bringing gas to your neck of the woods on Manhattan just at late 2013. That's the first time in 30 years anybody did that. Big benefits there. We're now building 2 projects currently into New England and proposing a $3 billion plus project with partners up there such as Eversource, National Grid, to take gas right into the rest of New England. The most expensive gas in the world this winter at times was in New England. That's just criminal in many respects. So great that we're actually going to build pipelines there. And then, as you said, by 2017, we'll move 2.5 BCF of gas south on Texas Eastern, which is just unheard of. So we've helped the Yankee fans. We're about to help the Boston fans. And as of today, we've got a proposal called the Philly Lateral. So we'll try to help your Philly fans getting gas into Philadelphia as well.
I saw that Philly Lateral. I was thinking, well, we're not doing that well. But that's okay, because it's really early. Now, Greg, you had an issue both with Canadian currency, was currency's weak, and also, I know you do have one division that's split 50-50 where you have some commodity exposure. Can we reassure our viewers that the commodity exposure couldn't necessarily derail your plans to be able to continue to boost that distribution, nor could the Canadian currency?
Right, absolutely. So as I said off the top, we expect to increase the dividend by 14 cents per year right through 2017. We expect no generation of cash to help pay that dividend from that division you're talking about, which is DCP. And our currency is largely hedged naturally. So we borrow in Canada, and so about 2/3 of any FX impacts actually offset by lower interest expenses. So I'm not concerned about that. Obviously, DCP over the long run is a great free option for shareholders. It is the #1 NGL producer, the #1 NGL or natural gas processor, and #3 in NGL transportation. So you're getting a very safe, growing dividend today and an upside opportunity at DCP as we move forward.
Now, Greg, I know you're mostly natural gas. There was a train crash today in North Dakota. We've seen a lot of train crashes. I think a lot of people are under the impression that pipelines somehow are dangerous. If you had to ship a highly flammable liquid via train or via pipeline, which would you think would be the safest?
Well, without a doubt, I think that's the safest. Maybe that doesn't matter. The U.S. government has often recognized over and over again that pipelines are the safest way to move natural gas, oil, and natural gas liquids. And that's why you're seeing a big move to try to get these pipelines in place. They're not easy, as you know, but ultimately it's the safest way, the cheapest way, and the best way to get these products to consumers.
Well, I think I want to leave it at that, because I think a lot of people think, there's an impression that maybe you can't build them, but I know you have rights of way, and that it's somehow going to be stalled. It's not at all. Your company is doing everything right. Greg Ebel is the chairman, president, and CEO of Spectra Energy. Good to see you, sir.
You too. Thank you very much.
We like steady distribution gains here on Mad Money. We like 4% yielders. This is the kind of stock that you need in your portfolio. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.